Thank you so much for joining me on the show today, Bankole. And let's start with that there, understanding what's playing out today at the fixed income market today.
Thank you, Ken. The banking system liquidity remains not so excessive. It's still below 100 billion naira. This is the level where you won't expect the CBN to come in heavily with OMO maturities. Of course, they had reduced the amount of OMO bills they have been selling in the last few weeks, depending more on CRR, cash reserve ratio. The last Nigerian Treasury Bills Auction held 2 weeks ago, and stop rates were 1.82% and 3.7 for 180, 90 days, 180 days, and 360 days, respectively. We expect the closing rates today not to be too far from these levels, even though the issuance this week is more than what we saw 2 weeks ago. A total of 90 billion is on offer this week. The DMO could sell more, given the low rates at which they are being able to raise these debts between 1 and 3%. We expect the rates to stop around 1.7, 2%, and 3.7 levels. The bonds market remains active, and that's the reason because we have higher yields there. Some bonds still have double digits, especially at the long end. However, bonds at the medium term end have now declined in yield to single digit level. 2035s, 2034s are now at single digit levels, even though with a very wide spread between bid and offer. So we have a lot of large fund placers and like PFAs and asset managers playing in that sector for now. So basically, we're seeing more action on the bond side and a lot of quiet on the Treasury bills market.
All right, but let's get into that Treasury bills market and understand what's playing down today at the auction and what you can expect going into the rest of the quarter.
Okay, the Debt Management Office has a calendar, and what is on play is simply that the exact amounts that are maturing are what they plan to offer. They increased, if we saw that they increased the amount they wanted to offer, then you could be tinkering with your pricing. So the amount that is maturing every by weekly on Thursdays is what they plan to raise. But the advantage here for the Debt Management Office is that they are raising these debts cheaper compared to when these debts were raised originally a year ago and 6 months ago. This has not, however, prompted them to raise more by way of volumes because there's concerns about Nigeria's debt growth, but more importantly, there's been more concerns with the cost of debt management versus the nation's revenue. So we've seen that they are taking advantage of the low yield market to raise not so much amount, but at very cheaper cost.
All right, now let's get into the Naira and look at what's playing, the dynamics at play there, and understand, looking at we saw pressure earlier on the currency, but are we seeing that abating right now?
Yes, the central bank, on the back of the last conference they held with the DMO, Ministry of Finance, with offshore players in the market, gave some level of confidence. We've seen some sales, even though it's not as it used to be before COVID. But we've seen some more activity, and we expect that in the coming weeks, when the airlines open up, we'll be able to see central banking itself come to intervene more. We know that the reserves have gone up with potential for and room for growth, but they are not selling so much because, honestly, most of the schools and travelers who would have ordinarily come to bid for PTA and school fees and other legitimate sources of effects have not, that sort of the economy has not kicked off yet. So we expect that as the economies open up locally and globally, we expect that the central bank would intervene more, and then Nigerian government in itself, would earn some more revenue. And if you look at the external reserve, like I said, it's been inching up. Crude oil price also is still on the positive at 41.5 levels. That's the Brent. We expect that if that touches 42 and 43, the next resistance level will be 45 because has been steady at 40 in the last 2-3 weeks. So we expect that 45 is a possibility, given the talks happening between the Saudi government and President Buhari directly, and the Russians may coming back to table in the last couple of weeks.
All right, we just recently had the Presidential Economic Advisory Council warn around against the multiple exchange rates. And looking into the rest of the second half of the year, is it a likelihood we might see that FX convergence happen, in your opinion?
Oh, yes, I expect that to happen because it looks like there's convergence even in the ideas, not just of the Advisory Council, but the central bank in itself. We have seen on the fiscal end, the Ministry of Finance has put work into place into ensuring that fuel subsidy is being removed. We have seen that the federal government is looking at wastages, that's looking into the on report. There are moves, not just on the fiscal end, but also on the monetary policy end to ensure these economic reforms as advised by this council initially. Of course, you will begin to see the impact of these actions when the economy is open up. When crude oil price changes, we expect that petrol price in particular will move up, and then we expect to see what would happen locally, with PPRA announcing regularly that they would only advise a range but not fix a price. We expect all this to come into play in the coming weeks, and like you said, H2 will be a game changer in the economy, and that begins from today.